This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th to Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. It is Monday. We have another week, and the last few have been pretty interesting and explosive to the upside. So when you enter a market after 4 weeks of big gains, you want to figure out what type of action can we have? Can we digest? Will it be a controlled pullback? What levels are there to watch? And pretty much, if you look around overseas, you'll see that, mostly things are quiet to the downside a little bit. But, from where we came from, you have to put it in perspective. If you remember last week, I talked about the HEDJ, a proxy for the DAX, multiple times to show if it were to blast off through 58, it could become somewhat of a tailwind. And if you look here at the chart of the HEDJ, you'll see that you had your low, just like our markets did in August. You had your double bottom, okay, which created a better technical landscape, came up towards resistance, held higher, and then blasted off above 58 on Thursday when the ECB said it could have some more stimulus. So look at the size of this move to the upside, pretty much right back into some big resistance. So with that being said, now you would think that this needs some time to digest, maybe pulls back into the 59.50 area, which is, if you missed this area, a move to the upside, perhaps you could potentially buy a dip somewhere around here. But I think those who positioned for this move did much better, as that gap up on Thursday wasn't the easiest to deal with, but this was a big gain, so a little rest makes some sense. And on Friday, all of a sudden, Asia or China said, the PBOC came out and said it's going to be more accommodative again, and then those markets responded well. Muted gains there, but they had huge moves as well. If you look here at the ASHR, we talked about this as well. First of all, look at the trend that took place to start the year that was broken before it was created a headwind. Then you had this, this flag type pattern that resolved to the downside. Then once everyone got real, did I say real too many times? Negative, you then had this small ascending type pennant channel, and it broke to the upside. And right now, actually, right into the 200-day. So, we'll see what happens around here. It's been quite a move from the Shanghai 2800 back towards 3500. So we'll see, if it stalls around here or busts through, and then gives a little bit more upside into year end, taking it back towards 4,000. Our markets exploded on Friday on top of an already big rally. Some spots are lagging, some feel exhausted. So this week will be interesting. If you look at the chart of the SPX, you will see that this huge decline that happened in late August that was pretty telegraphed technically, has been taken back. So if you went on vacation, late August, and you came back today, you're like, oh, nothing really happened in the market. But if you were trading through it, you had your big break to the downside. Here was your August 24th lows. Okay, came back up, did a topping tail into resistance and wasn't ready, came back down, created another low, a double bottom type retest, W pattern, which we've gone over many times here, so showing you to take potentially some risk, and then it cleared this area, and let's just fast forward to where we are, right back into resistance. So I would think at this point, you do get some kind of sideways action in the SPX. What level you have here is Friday's low, which is about 2,058, and then a bigger area closer to what is this, is 2040. So you could see a move to digest this. If it doesn't trade below this, it's pretty, I would say that's pretty impressive stance by the bulls, but I think most would like to see a little trickle down into this area, to make it viable. If you look at the spiders, you'll see a pretty big size gap from Friday. So you want to see, how do we handle this gap this week? Do we hold above it and trade above this pivot, which is a 206.30? Okay, so write that down. If it were to break and close into that, then the gap gets filled, and then just like I showed you with the SPX, maybe at some point we get back to this 204, which would still be very constructive, and we would be holding this recent trend from the last gap up. So I'm not sure if this time this gap doesn't get unfilled. So the leadership group, real quickly, is the Qs. So the Qs have had a huge move. We've talked about it many times. How could you have seen it? Well, you saw the spiders in the SPX that came back and retested the lows from August, and you know what? This one didn't even come close. So that showed you relative strength in tech. And then from there, you've had this ascending channel that's held the entire time above all the moving averages, and now look at this exhaustion type move. So at this point, it would be good if tech rests. For the Qs, right down 112.07. See if we go sideways in front of these old highs and see how long that takes. And if we were to trade and break below this, we could retrace a little bit and fill a portion of this gap. So we need to see what's going on there. So the question is now, was that the rally? Did the rally borrow from the seasonally strong period in November, December? Maybe. There needs to be a lot of things that happen in order to get much more traction to the upside. So what I think needs to happen is, if maybe the S&P digests with a downside bias, we have to see what happens with the Russell, what happens with the bios, what happens with the banks, and even oil. So first things first, let's just talk about the Russell because it's the tightest. So I'm going to be watching it this week to see if it plays some catch-up. I like tight patterns here, and this is very, very tight. So we'll see if this little upper area holds. So if the IWM were to hold 114.73, maybe there's a chance that we get a little catch-up trade back up to the September highs, which would be nice because it's calculated. If you were to get a close below this, then this is important support. So at this point, it's lagging, but at least it's tight. The IBBs are weaker than that. The IBBs, perked up on Friday, maybe on some hopes that VRX would, act better today. We'll get into that. But this also, has a little bottom channel. So in order for the markets to, broaden out a little bit, this is going to have to take out and close above this 317, and that could take it up to the 200-day. So we'll see in this lower range if it could hold higher. Holding higher means that it holds above this, just say, 308. If it could build an upper area within this channel, maybe it'll lend some confidence that it could break above this to the upside. And also, VRX, which has been the problem child of this group lately, it is down $13. So the close here was 116. Just so you know, in the market, nothing looks that easy. Everyone was trying to position into this for a big bounce with the company coming out today. And if you did that, it's a bio, you're probably a little underwater today. So here is the low here in VRX. The low was 88.50, and then here is this is, what is this? This is 94. So I think it's trading somewhere around 100. I guess one thing would be is if they focus and make it specific on VRX, where they put it in the penalty box and they say that it was shady management, this and that, and they don't sell the other bios, maybe that'll give some confidence that the rest of that group with more quality names could come back up a little bit, and that would help the IBBs. As far as oil, the XLE is trying to hold this channel here, so this might be a setup for this week. You had your first igniting move above this pivot after a higher low versus the August lows, and now it's going sideways. And if this wants to move to the upside, maybe a close above what is this, 69.50. It held that 67 spot that we talked about. Let some of the moving averages catch up. If it wants to get some more traction, it could see another move into the high 70s. Oil itself leaked a little bit in the last week or two down to the lower end of the range. So I guess the XLE held in somewhat well considering where this came in. It's up a little bit this morning. If this were to get below and stay below this and really start to go to the downside, then I guess it'll affect the XLE in those names like Chevron, XOM, and et cetera, and also probably raise a little volatility. So I would think in order for the market to get more traction from here, a few of those things, have to happen as far as holding in there and playing catch up. If not, we probably saw the biggest move we're going to have of the year in the past month and a half, and then, now it's going to be probably choppy and very, very stock specific. If you were, here on Friday, or you probably saw them talk about Amazon and Google and Microsoft all day long. But the fact of the matter is you had to be in them prior to earnings, which is tough because that gap up, the pre-market highs was the high of that move. So we have to see what happens next here. So you go to high beta land, you go to Google, another huge red bar after earnings. This one came up here, and then within 5 sessions, retraced, and then it wound up filling the gap. So here on Google, it actually opened up, and it was a better sell than a buy, but also look where it came from in September. So it needed to, I guess, digest some of it. So this is the old highs here. So you'd want to see this area hold for any hopes that you could get higher prices this year. Right now, you have this as your pivot. So your pivot for Google as a trader is 717.94. If it were to trade below it and come back above it, maybe that's your swing buy versus the low. If it were to trade below it and close below it and not come back above, stay out of the way because you don't know, where it goes. Kind of like what happened here. Came into the gap, finally turned, and then grinded a little bit up. Not sure what's going to happen this time, except that, it opened up, sold down after a big move, so we need to see some kind of pivot develop to trade against. Same thing for Amazon. Amazon has done this so many times. It had a huge gap up after earnings, and then trickled, and then actually became as choppy as you-know-what before going again. This time, gapped up, sold down, didn't give you much opportunity at all before closing the gap, and now here you go again. So as good as these things look, they've been better for institutions and investors versus traders that don't take risk into earnings. You had to actually buy it real quickly, after the print, which you had some time to buy this at 580, at 600, and then sell the open, and then now here's where we are, the big red bar, right down this pivot of 595.36, which you have to trade against. I think there was an article out talking about how it's still expensive. So see if it does come in and test this pivot, if it holds, or you have to just wait for some kind of reversal strategy. But if you just buy the whole way down, it could be a little troublesome. So Amazon and Google, we have new pivots here, and although they, we're at all-time highs on Friday, every trade long, from the open was a bad one. So, this week we have Apple. So we'll see what happens. Apple, we targeted a really nice trade. I put the chart on Twitter. We put it on our Buzz and Banter and everywhere out there. Right here, it was nice and tight. So it broke out, gave you that 4-day move prior to earnings. So if you were waiting for that move, at least you got up before earnings, so you don't have to wait for the event risk. It's off a little bit today. See if this could hold this 116.33, go a little sideways, and then tomorrow I'll talk a little bit more of a strategy of what we should be looking for into earnings, which are after the close on Tuesday. There's still some bigger resistance here. We'll see if it can go from red to green today, but it probably has an off day considering the size of the move that it just happened. My rule. Day one, you want to buy. Day two, sometimes you accumulate, and then you sell into 3 and 4. I actually still have a little bit left. Then you have Netflix, which already reported, and kind of jury's out right here. This has been a momentum leader for so long. You have a gap down after earnings right here, which has not been filled. So this unopened gap, could lead to more weakness, but then you still have a level of support right here. So I'll focus on this week. If money wants to come here for a trade above 101.56 with authority could actually fill this gap, which would have it rebuild this chart a little bit better. But if that doesn't happen and it starts to break below this, you then have 93.50, and then the 200 days below. So at this point, it's just don't do too much here, but you can keep one eye on it. Kind of the same thing for Tesla. Tesla's been somewhat of a broken name ever since this ugly candlestick right here. With this flag pattern and engulfed it, and then you had the 2 down days, lost all the moving averages, and then lost the 200 day, and now it's really down here, and I don't know what to expect, except for most guys are not even really trading it because it's weaker out of play. Tesla's so much better when it's above the 8 and 21 day trending with authority versus to the downside, unless you like to short things. Okay, so you'll see. Lastly, FIT. nothing too compelling here. It's still trying to build a pattern here, and every time it gets strong, it sells off. I don't know if it's even worth a trade here, but it's still wedging besides all these little fake out moves, and I guess above this spot it could kind of trend its way back towards north of 40, but you have to be very, very specific in your prices there. When you go to social media, Facebook was a really nice targeted trade for us. Some of us bought options, last week, which wound up working out well. The stock gave us multiple entry points. If you look at Facebook now, if you're an investor in Facebook since way back when, you've built yourself some wealth. Look at the size of this move that it's seen. And if you've been shorting this thing the entire way up, you're probably out of business unless you're just out of ink because all you do is write and not trade. But anyway, recently the question is, how could you have made some money? And you had two different entries. You had this red dog reversal entry right here, when it pulled back and held the 21-day. Then you had another momentum entry when it cleared this 94.50, and then boom, it responded well with Google, Amazon, and Microsoft, etc. So now the question is, does it hold and build above this 100 for a little bit, let some moving averages catch up, or does it just, take this out and continue ahead of numbers? Numbers aren't until November 4th, so I could do whatever it wants here. I actually trimmed half my options. I have a small amount of stock on, and I'll see if it could digest here and give us another setup. There's no real setup there. LinkedIn actually gave people a setup. I talked about this in my note and on Twitter about this tight little spot, and it cleared it on Thursday, gave you follow through on Friday. I don't, at this point, maybe it fills this gap, but it's really not that compelling. And then lastly, you have Twitter, which is interesting because all in all, it acted pretty well after after the Morgan Stanley guy, crushed it. We were all sort of in a high tier right here, hoping for some kind of breakout prior to earnings. And then the Morgan Stanley guy came in and it didn't fall apart. Some of you guys held through and just sat and, it didn't affect you, and some got stopped out. I know I got stopped out, but now it's going sideways again. There's some bigger players involved, and, didn't fall apart with Morgan. So, who knows? Maybe it's priced for a move up, because if they don't miss on their MAUs and they come in a little better than their pre-announcement, you could see this quick. So what I'm probably going to do is, with the futures down, I might buy some options today because I don't take stock into numbers. And if there's a trade there after hours, maybe you could buy it through 31.50. But sometimes it happens so fast. So for me, I'm going to probably take some calls because calls are premium paid. And if it doesn't work, there'll be zeros. We've had some good option plays recently. We had a good one in SanDisk, a good one in even win before earnings, and then even Facebook was a double plus, last week. So, I have a little bit of room, so I'm going to do that considering, we'll see what happens there. As far as other situations, let's talk about the banks a little bit. Okay, so you have Goldman Sachs, which was upgraded by Morgan Stanley. This chart has been, weak ever since really, breaking trend well back when, okay, right back here, actually right there really, and then it came up and retested it. Now you have a little bit of a downtrend right here, a descending channel. So if it gets above this 186.50, perhaps there's a trade here to 191. Morgan Stanley upgraded Goldman Sachs, and they downgraded Citigroup. Citigroup actually looked a little bit better technically coming in, which is always funny. So now, we'll see how it handles this. This took back the 200-day. I'm actually long this, thinking that it can get up to there. So we'll see how, it handles the downgrade, holding and closing back above this 53 would, give a little bit of confidence there. JP Morgan, what has that been doing? Poking its head above the 200-day. These aren't great trades. They're just, kind of crawlers. And with the Fed on Wednesday, maybe that can continue or not. And then you go into, what's it called, the metals. Metals had a big move, and they've been out of play for a little while. So we'll see what happens here with the GLD. Can the GLD hold higher after, you had this feisty move for the first time this year, okay? Peaked out right around 114, and now it's trying to hold here. It held in pretty well considering how strong the dollar was last week. So if you're still in this, the 21-day just played some catch-up. You have a descending channel here again for some momentum to come back. I would think that you get a strong close above this 112 again. And if that were to happen, maybe you get a bigger move. This thing's been trapped for such a long time, and it finally looked as if maybe you can get more than a micro move. This is when it broke on a macro level, and now you have this descending channel here. So some were hoping that you could see at least a move into year end closer to this 118 to 120. If that's the case, you would think that it should have a pivot bottom in, especially now if just say the S&P wants to rest a little bit, maybe some money comes back to here. So see if that's the case for at least for active alpha cash flow. So with all that said, we've come a long way in the past 4 weeks. There's been lots of tradable pivots, which is why I put them on Twitter every single day with different prices to make adjustments. A lot of guys got caught short, okay? And, if you were short at times, it made some sense, but then there were other times when you had to cover it because the market was telling you were wrong. So if you rolled it up and you hated life the last week or two because of the rally in the markets, next time don't do that. Your life's too short to hate life because you're short the markets. Anyway, at this point too, if you missed out on some of the rally, don't just start chasing it now. Wait for setups, be patient. And it wasn't easy. It's never easy, So, the only thing that's easy sometimes is putting in the hard work to, actually, that's not even easy either. But you got to educate yourself, put in the hard work, put in the time to come up with a plan to at least give yourself the opportunity to get involved at time frames when the market's on the move versus being lost and not having a proper game plan. And if you're watching this, at least you're putting your best foot forward. If you read my note every day, I think that's another great tool for you to use. To have your plan, because that's my morning game plan on paper that I look at every day, and then I narrow it down to 3/4 situations to make my cash flow, because I am a trader besides a strategist, besides the media guy, besides this, and I wear multiple hats. I'll actually be on Bloomberg today at 12 o'clock if you want to take a look with my old school morning call girl, Alex Steele, who was with me for years, and now she's doing great at Bloomberg. So anyway, it's another week. We'll figure it out. If you missed out again, don't just come out of guns a-blazing, and we'll see what sets up, which we always get new setups, either long or short, and we'll take it from there. Have a great day trading. It's a new week, and I'll see you at the recap.